If you're considering buying Hyliion shares in your portfolio, then please keep watching this video until the end, because it covers many of the factors that should be considered regarding buying, holding, or selling the shares. During the most recent trading session, the stock opened at $11.46 and closed at $11.55. The lowest point at which it fell to was $11.26, and the highest point it rose to has been $11.74. Compared to the current price action, its 52-week low has been $7.69 and a 52-week high was $58.66. The current trading volume of Hyliion is 3.1 million shares, compared to the average volume of 4.8 million shares. From the recent trading volume, I would say that we can see that the stock has been recovering from the pullbacks and that the market wants to be careful about diving headfirst into the stock this time around. It should be noted that it is significantly less traded compared to the usual trading volume, which may suggest that a recovery is still fragile, or that Hyliion may simply have less demand from investors altogether. The short-term trend of Hyliion is the one of recovery from the recent bottom at $8.27, and the confirmation of the trend is no longer going lower at $8.53. The share price has recovered by almost 40% from that bottom since then, and I believe that it'll probably keep doing so unless there's a major market event. From a long-term perspective, I think that the company has surged to an extreme back in summer 2020 due to speculations and hypes, before sell-offs began to hit big time. Keep in mind that Hyliion is one of the few startup companies that never got any significant amount of negative press, that its products seem to be solid and legitimate, and that from an operational standpoint the company is progressing. The market sentiment hit over the entire sector, which can explain part of the debacle. Going forward, I would recommend a gradual buy in Hyliion, but keep an eye out for the daily trading volume. If the volume starts to dip, it means that the market would be less and less willing to keep moving forward, and a pullback would be near. Make sure to adjust your buying patterns accordingly at that point. From the price actions patterns, we may be able to get a glimpse of whether the stock still has enough steam to go upward. Now, let's take a look at the company's enterprise value, which represents how much the company's assets are worth once the debt is removed. The enterprise value of Hyliion first increased at a significant manner, just like many other companies in the sector, before suffering some damages from the sell-offs. However, we can see that from the enterprise value that, unlike the market cap, it does show a smooth decline over its peak of $1.99 billion to the current level at $1.58 billion. Another outside signal to observe is the total number of shares outstanding. Generally speaking, if the number of shares keeps increasing, then it suggests that a company is selling itself to pay the bills. On the other hand, the number of shares currently outstanding at Hyliion changed a lot since a year ago. Hyliion had about 30 million shares in Q2 2020, and it was multiplied by almost 600% by Q4 of 2020 at 169.3 million shares, before stabilizing at the current amount at 178 million shares. Don't forget that the company is a startup and has to sell its equity to raise capital. For companies such as Hyliion, there may be no other way around it. Their operations burn cash at a fast pace, and for now, one of the only ways to gather enough money is to dilute shareholders. This is not expected to go on at a large scale, but when investing in Hyliion, we must face the fact that this may be a real possibility going forward, when new waves of cash crunch arrive. Meanwhile, the financial market's overall sentiment is still relatively reluctant at putting more money in the same kind of companies. Following the stock market craze in 2020, the stock market decided to pull back massively from the entire disruptive and innovative stocks, covering biotechs, EV, and anything requiring keynote presentations to attract investors. This wave of pullback can be explained in two ways. The market needed niches to park their capital into, and since the stock price of those niches increased multifold for some, many of them decided to lock in the profits or at least cash out their capital and didn't mind the massive sell-off that it would initiate. The second reason was because the market became aware of how overly exposed many investors have become to the growth stocks. There are many reasons why the stock ultimately collapsed for so many companies that everyone was talking about. These are the main reasons why the stock ultimately collapsed for many companies that we were talking about. In the current circumstances, the recommended approach is to be careful when buying the shares. On one hand, the stock may be able to climb back on its own when the operations begin to bring enough cash. On the other, the stock may simply increase when it fell low enough. This means that in the current market settings, we need to tread the water carefully regarding buying shares. Many of them became overpriced over the past 12 months, and we may need to wait for another few weeks or month before the timing is ripe to increase our holdings once again. With that being said, there will always be sudden events that will create volatilities for individual companies, and this is why it is always recommended to hold a small position in those stocks in case you fear missing out. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.